Well, thanks for having me on, Martin. Look, generally, if you look at all broad commodity markets, we're experiencing something that I haven't seen in 35 years. You have broad commodity markets on major lows. I mean, you look at oil, you look at precious metals that just bounced off kilos, you look at grains, you look at all the broad commodity markets. Now, coming to oil, we obviously have a supply-side issue in oil, which is well known. Currently, we feel this market has seen a key low. We've seen the first action on that. Everyone jumped on the bandwagon. We really feel that this is purely a bottoming out cycle that we're going through now. Currently, we're retracing, expected maybe back in a $34, $32 area. For us, we think this is huge opportunity. There's opportunity for people to look at the long shots and look at the long outlook for crude oil and related stocks. We're generally quite excited about that.
Okay, so you're talking, Marcus, right now, right here at these levels, or a little bit cheaper, a little bit lower, around about 35 for entry point?
Well, currently, technical outlook still looks corrective, so we still like to be a bit patient. But look, if someone is not positioned yet, we'll average ourselves in it. But really, between $32 and $35, we consider crude oil to be good value.
Okay, why not wait, though? Because I know on your dollar view, you're looking for dollar to backtrack, to retreat 10% from levels where we are now. If that is the case, and given the tight correlation between where dollar goes and where oil prices go, does it make sense to wait?
Well, not really. I mean, essentially, what most people forget is the U.S. dollar tends to retreat in most tightening cycles. It tends to rally into an expectation of a tightening cycle and tends to actually ease off once the tightening kicks off. Now, it's a tightening cycle in the U.S., obviously coming off extreme lows and being actioned very, very gently. This U.S. dollar counter move from here, we expect another 10 or 12% retreat from current levels on the index. There could be on some of the individual currency pairs quite a bit more. We feel that will be an underlying support for just about any commodity out there, in particular oil as well.
All right, and Marcus, you're also seeing a good entry point for gold, is that right, round about these levels?
Well, look, I'm a huge gold bull. I just think it's a must-have for any serious investor to have 5 or 10% allocated in gold or gold stocks. We all know what's out there. We have all the smart people in central banks at zero rates or negative rates. I mean, we're heading into troubled waters here. We're heading into very difficult times. And gold is money, and people have to be reminded of that. It might have been a bit less the last 25 years, but before that it has been seen as money. And we really think gold technical outlook is bullish to us long term. Short term, like with oil, it could correct back to 1180, 1200. We think that'd be quite an interesting opportune level to get back in or average in. But also in particular gold stocks. I mean, if you look at performance of gold stocks like your conservative Barracks and Newmonts, the way they just kicked off the last 3 months, they're all in corrective cycles now. We think all these gold stocks should be looked at over the next few weeks once this correction is expected to finalize.